So actually this video, it's not gonna be any fancy type of video. It's just one video that's gonna keep education going in showing you guys that it is important when it comes to prop firms to actually read in detailing the things that might lead you to actually losing an account, breaching the account, soft bridges, just the importance of FAQ and the importance of reading rules. What's Gucci, everybody? This is your boy the Go Andy's on. Welcome back to my YouTube channel. If you're new to this channel, please don't forget to hit that like button and please subscribe. So guys, I'm here to share with you that I've lost my Blueberry funded account, mainly because of the 150% rule. Mainly because of the 150% rule. So after I've lost the account, you get reset back to phase one. So I'm currently in phase one. Basically, no, I'm not in phase one. I am in phase two right now. But as you can see on the screen right now, this was the email I got from Blueberry Funded telling me that I've breached the 150% margin rule because of the trade I took, which was I think it was GJ, if not GU, but I'm going to show you on the screen. Here it is. You can see also the margin is red. So this shows that I've surpassed the margin that I was supposed to reach because of overload sizing, over risking. And this led me to actually losing my funded account because I over risk. I didn't follow the soft breach. And bear in mind, these are the rules that I never paid attention, that I need to read up to. I think it's just the perspective I have regarding prop firms, whereby I'm thinking, okay, number one, I have to not reach the daily drawdown. I have to not reach the max drawdown. Maybe I don't have to trade news. So in my head, all the time, I'm always in that mentality. But it's not a train smash. We already passed phase one again. So we're going to go through it right now. As you can see, this was my Blueberry funded phase one. You can see we reached the 10% profit target. And then you could see the first day we traded the account, we took a loss. The second day we traded the account, we took a loss as well. So we were down about $6,000, something like that. We had done about $6,000 something. And then the other day we took a $10,000 profit win. The other day we took a $4,000 profit win. And then this was just one of those days where I have to reach the minimum profitable days, because with Blueberry Funded, you have to reach 0.5% for a day to count as a daily thingy. And then we can see also here, there it is. You can see 10,000 was reached, and then minimum trading days were reached as well, with trades taken, it being the first trade that gave me a loss. Oh, these were the losers. Yes, you could see 1.82%, 1.82%, also 1.82%. And then you can see also here the winner, duration of holding, that's that. And then currently we are in phase two. All right, so as you can see, this is my phase two. So I'm currently on the trade. That's why my equity is 528. As you can see, the profit target is $5,000 that I have to reach. I haven't met any minimum trading days yet, because a day is calculated when you close at least 0.50%. And then, yeah, that's just that. So let's jump onto trades that you can actually look at and trade next week. So the bigger part is always on gold, guys. One thing about gold currently, it is not in a good state to trade unless you are buying. And it's really rare to get those buying opportunities coming, because you never really predict when the market can move again, besides following the higher highs and higher lows. So the advice I would give you guys, stay away from gold until further notice, until we know what's going on, because furthermore, it's just been going and going and going and going and going. It's not giving us anything to look up to, any way forward and all of that. But we will essentially see when gold is about to turn around. So let's go into NZDCAD. So with NZDCAD, so on a NZDCAD, guys, I literally went on a weekly time frame, right? So when I got in a weekly time frame, what I picked up first was this impulse move that happened from 2022 until 2024. It was essentially respected. Why am I saying that? When the market dropped in 2022, it dropped, but yet in 2024, it came back to respect the value gaps that were left lingering around these areas. That is why the market had this impulse move to the downside and then had this as a correction. And then now we just experienced another impulse leg again. All right. So from then, I need to furthermore drop it down in order to get my setups straight. So what I did was, okay, I went on a daily time frame. When I got to the daily time frame, I checked the move from here to here, and I figured that we already created another low, so this low is invalidated. So what I need to check also would be um, from the market here and to here. We can essentially see that the market at least has fulfilled the 90% rule of this trade. So there's two things within this. We already swept that high and liquidated it right here. So we dropped from then. And then now we have to take our fib tool on a 4-hour scale to pick up that the prices has a chance of actually turning right here and actually start going down, right? But it won't just open and shoot down. Maybe what it can do, it can come, maybe respect this area right here and then drop it a little bit lower. Why am I thinking that it's going to do that? On a 1-hour time frame, you can pick up that there's a high chance the market might want to complete a head and shoulders in a smaller version, which is from here, there, the left shoulder, the head, and the neckline, and then the right shoulder before the market starts dropping. So in this instance, we gotta be patient enough, but we know in overall, we're looking for overall selling momentums when it comes to NZDCAD. Now let's go jump on GBPJPY. With GBPJPY, there's a lot of actual imbalances that I'm actually seeing. But entirely, I've realized that we came back twice into this area and we still failed to actually reach that point where we reached the exact 71th level. So this means there's high momentum towards the sell side. Yet again, the market keeps turning around these areas without going to wipe out that liquidity. But so far, if I look at the 4-hour scale, what I'm realizing is we might experience this as our impulse from here. This is our correction. And then maybe we might expect the market to drop a little bit further more in order to respect this area we saw that is right here. Remember, entirely when you analyze, you just calculate probabilities of the market happening. So far, since the market is dropping, this might be the correction. You might look furthermore for down trending momentums. So those are my top two trades so far. And we go on UJ. When we go on UJ is pretty much frustrating because there's a lot of extra things that are happening. Why am I saying that? So if we look at the market on a daily time frame, one thing about me, I look at the bigger scale before I look at the smaller scale. UJ has actually reached one of the pretty much lowest low, which is right here. So the pretty much confusing part about the current market is the dollar is expected to be strong, but yet it's not happening to be strong. This pretty much shows how the fundamentals are really playing part to weakening the dollar. But one thing for sure is we might wait until we wipe out this liquidity before we go up because it has failed multiple times to turn on our areas of sensitivity, which might be the fair value gaps that were left around these areas. So furthermore, we might be looking for this to go up a little. Checking on the dollar index, we might similarly see the same thing as well. The scariest part about this is I was expecting the dollar index to kind of turn and give us better momentums. But when I looked at this area, we have actually broken this area because if you go on a daily time frame, you're going to realize we had this wipeout happening right here, which might be showing the continuations of downside momentums. So now we need to look for what is the probable next move that the dollar index might reach. So by the looks of things, the dollar might be reaching this level. So if we take our retracement from here and put it right there, we might realize that the fair value gaps are lingering around these areas right here. So this gives us an idea that the dollar might be weak until maybe it reaches these levels right here and retest on this trend line before it starts going up. So far, myself, I am not trading any dollar related pair, it being GBP USD, Euro USD, Gold, or USDJPY. Why? Because the dollar is oversold and it looks like it's still gonna do the same thing. So I hope you take more on these trades, and capitalize from them as well. If you would like to buy a Blueberry funded challenge, I've actually affiliated with them. You can get a discount when you use my promo code of ND20. You're going to get a 20% off, and then you can get yourself any challenge. I can't wait until I share my next video whereby it's a payout. I don't think probably I'll mix the video of phase 2 and the payout at the same time. Much love, peace and happiness. Champagne.